let me just start introducing what this topic is. I will not be starting with the slides, but I'll just give a very general introduction to how the entire thing would be covered. I will start with this type of an introduction. Let's assume that we have the financial statements. Financial statements consist of the trial balance, trading account, manufacturing account, and then profit and loss account. Then we have the balance sheet, then cash flow statements. These are all mandatory things. Let us assume hypothetically that we are constructing financial statements. The construction goes like this. I have not made any slides on this, but I'm sure you will be capable of imagining this. Let's say year one, this is just the starting year. Opening stock, nil, and then you have the manufacturing expenses, maybe about 100 lakhs. Let's call it as 1 crore. And then other overhead expenses, maybe 100, say 20 lakhs. So the total of manufacturing plus the overheads come to 120 lakhs or 1.2 crores. Hypothetically, imagine that we have not sold anything. This company has not sold anything. So if nothing is sold, on the other side of the balance, say manufacturing, trading account, and profit and loss account, you would normally keep the closing stock. That closing stock is valued at cost, and let's say the other side is 120 lakhs. That is 1.24 crores. So one side you have 120 lakhs, the other side also you have 120 lakhs. And if I want to balance the account, no profit, no loss. Imagine that I'm carrying forward this closing stock to the next year. I'm carrying forward this year's closing stock to the next year. I call it as opening stock. There also we have the manufacturing cost and then overhead cost. Again, second year we don't have any sales and I'm valuing the closing stock. It is there. It is there on the credit side. Suppose you imagine the T account form, it is there on the credit side. If it is a vertical form, maybe the income side, then you balance this. Again, we find that the total expenses and then the other side, because of the closing stock, it tallies. So no profit, no loss. Third year, we do the same exercise. Fourth year, we do the same exercise. Fifth year also, we do the same exercise. Year one, I am able to show no profit, no loss. Year two, again, no profit, no loss. Year three, also no profit, no loss. 4, 5, all 5 years. Now, suppose somebody asks, has your company achieved the break-even point? The answer, perhaps somebody who has prepared these financial statements is, since the break-even point is defined as no profit, no loss. Year one break-even, year two break-even, 3, 4, 5, all 5 years we have achieved the break-even point. This is something that an accountant has put forward to all of us. Now, as somebody who is looking into the financial statements of a company, would you accept these financial statements and the statement that this company has achieved the break-even point in year 1, 2, 3, 4, 5, all 5 years without selling in a single product, because you are valuing the opening stock, closing stock, previous year's closing stock becomes the opening stock for the subsequent years. It goes on like that in a number of years. So somebody presents this and somebody tells that we have achieved the break-even point for all the 5 years. Would you, as somebody who has studied accounting, accept these financial statements and the claim that we have achieved the break-even point? I would like one of you to respond to this, one of the participants, just for my benefit. Would you accept this claim? Any one of the participants, can you please respond? Yes, there is a chart. I would be happy. I hope the organizers have allowed you to unmute and then answer. Biju, they can unmute and answer, right?
Yes.
Yes.
Everyone is permitted to unmute and answer.
Yeah.
I would.
One of you can unmute and then just tell.
Yes, sir. Can I speak?
Yes, I want you to speak.
Yeah, I'm Dr. Rekha Chetwani from Pune.
Yes.
Sir, because there is no sales, there is no question of break-even, because at break-even, your sales revenue and the total cost should be equal.
Yes. Okay.
So because no sales is there, no revenue is earned by the company.
Yes. All right. That's.
So will not accept it.
Yes, you will not accept. That is one of the definitions of break-even point, because when you come to costing and then management accounting, break-even point is defined as sales minus variable cost divided by contribution per unit. You will get the break-even units. That is the number of units to be sold to break even. But here is a magician accountant who has shown that not even one unit has been sold, but then he has achieved this break-even position for all 5 years. So she said, I will not accept because there is no sales. But then somebody who is reading the financial statements and presenting it is convincing that after all, break-even point is a position where there is no profit, no loss. So I'm showing you no profit, no loss. What is wrong in what I have prepared as the financial statements? This is a question that is again shot back to you. What would be your response? Anyone, including the madam who said, I will not accept. Yes, that's the right answer. Your answer is right. But why? Anyone can answer. Please do not bother whether it is the right answer or wrong answer, because there is no perfect answer for these things. These are all the issues that we look into in the forensic accounting. Yes, anybody? Any other responses? Yeah. Voice is cracking, is it?
Yes, sir. This side I was not able to hear you completely because there is disturbance in between.
Okay, now.
But
now
madam, it is very clear. That's why we are not informing, sir. Actually, this end it is very clear.
Okay, yeah.
At my end, there might be some problem.
Right now, I don't have any problem with the internet. I'm just checking. Okay, all right. Anybody? Any response? Quick response, please.
Please repeat the question, sir.
No, see, you said since there is no sales, we cannot accept this as a break-even point. But the accountant who has prepared the financial statement says, after all, the definition of break-even point is no profit, no loss. And he is showing no profit, no loss for all the 5 years. What is your counter argument? How would you counter it? One counter you already said, since there is no sales, we cannot accept. But that is his counter argument is, your definition is no profit, no loss. Anyone?
Sir, can I counter this?
Yes, please. I want you to do that.
See, if anybody is saying that if there is no profit, no loss, it is a break-even point. Such a time, I can also say that I am in break-even point because I am not doing any business and I don't have any profit or any loss.
Yes. Okay. But any further point?
No, sir. This is what is my point. I am not doing any business and thereby I don't have any profit or any loss at all.
Yes. From the point of view of accounting, can you find out anything that you find is something wrong with this? Get back to your accounting principles, valuations, and all these things, and then see whether there is anything that you can bring in as an accounting concept, as an accounting principle, and even the accounting standards that you have studied, which are now being re-christened as reporting standards. Okay.
In order to break even, the contribution should exactly match with the fixed cost. And to get the contribution, there should be some amount of sales, and from that sales, we have to deduct our variable expenses. Then only we will get the contribution.
Yes.
If there is no contribution, a break-even point is a point at which the contribution must exactly match with the fixed cost.
Yes.
So to get the contribution, there should be some sales, and from the sales, we have to deduct the variable cost also.
Yes, that's one of the perfect arguments. But I also want you to bring out the argument from the point of view of the accounting principles. What is wrong in what has been accounted? Do you find any problem in? Yeah, somebody is putting on the chat box revenue recognition. There is no revenue for you to recognize. Okay. All right. I will give one of the arguments. There can be many arguments. Just check what is going on here. Year one, He doesn't make any sense. This is an hypothetical example I'm giving, but this is the way we can learn how the accounting principles can sometimes be misused and then use creative accounting. Year one, he has manufacturing expenses, overheads, and then it is true that the closing stock needs to be valued, and closing stock of the first year becomes the opening stock of the next year. It goes on. 5 years example I have given, maybe I can give the example for 20 years also. Now, the counter argument for preparation of financial statements, somebody who is countering this from the one argument, I think 2 of the faculty members who are online have given, that's a perfect argument. There is no sales, and therefore I cannot accept the proposition that this company has achieved the break-even point. But from the point of view of the accounting principles, one of the valuation principles of closing stock is to be brought in here. How is the closing stock valued? For the purpose of preparation of financial statements, how do you value the closing stock?
Cost price or NRV, cost price or NRV, whichever is less, whichever is lower.
Yeah.
Cost or
NRV means net realizable value. Net realizable value.
That's perfectly right. It is cost or net realizable value. Please understand, whichever is lower. Now, to counter this person who has prepared the financial statements, I go to closing stock and I ask him the question, how did you value this closing stock? Because your total cost is maybe 1 lakh, say 120 lakhs. You have taken the cost. What is the other side of valuation? Other side of valuation, the principle says you have to value the closing stock at cost or net realizable value, whichever is lower. Now he says, I have taken this. How do you counter this? Yes, I have considered cost or net realizable value. Please understand, earlier principle was cost or market, whichever is lower. But now it is cost or net realizable value, whichever is low. Now, suppose he puts forward, yes, I have taken this into consideration. How will you counter this argument? Yes, any quick response? Any quick responses? Okay, all right. Just listen to me carefully. Now I have to question the veracity of his claim that he has taken cost or net realizable value, whichever is lower, by taking one of the things that is happening with this company. Year one, he is not able to sell. Year two, he is not able to sell. 3, he is not able to sell. 4 also, he is not able to sell. 5 also, he is not able to sell. That means there is no demand for this product. Or there are competitors who are pricing his product much, much lower, and therefore he is not able to sell in the market. And therefore the net realizable value must be less than the cost value, and that has not been accounted in this. Therefore, if you correctly use your principle of cost or net realizable value, your closing stock will not be valued at 1 lakh or say 120 lakhs, but it would be valued at much lower. So even if you take his argument of break even of no profit, no loss, that becomes an untenable argument using the accounting principles. Now, what I'm trying to bring home is, see, accountants can bring in various issues in the course of preparation of financial statements, and using certain, leeway, that is the choices allowed in the accounting standards or the reporting standards. It is possible for us, I'm sure you have gone through all these things, it is possible for us to present a picture which can be different from the real picture of the company. So this is one of the counter arguments that we can run for this. Now, with this very short introduction, let me just share some of these slides that I have prepared, and maybe at the end, we will allow some question answer session, because I want the participants also to raise certain issues. Biju, is that acceptable? About 10
Yes,
minutes?
sir. Yes, sure.
10 minutes for discussion or 15 minutes for discussion?
Sure, sir, sure.
Okay. What about the participants? Would you be comfortable with that? 10 to 15 minutes for discussion? I want the participants to come online and then tell me quickly. Please, quick responses. Let's not waste time.
Yes, sir.
Okay, all right. So when it is 3:15, you can just remind me because I might simply go on. 3:10, when it is 3:10, you just remind me. I'll take another 5 minutes and then maybe wind up from my side. Then we will have discussion. I will start sharing the screen. Just let me know whether you are able to see the screen. You're able to see? Biju, I think you're able to
Yes,
see.
sir. Yes,
Yes, it's visible.
But yeah, because of one side, are you able to see the entire thing?
Yes, it's visible, sir. It's clear also.
Yeah, it's clear also. Okay. This is the topic that has been given to me, India's landscape in forensic accounting. This is what we are getting when we refer to some of the websites or the textbooks which talk about accounting. It seemed to have originated from 1940s, and then Frank Wilson is credited with this forensic accounting in 1930s, and then it originated in 1940s. All those things are there. Internal revenue, he was investigating all those, the issue relating to Capone. But my own reading is formally, yes, 1940s you can trace because Wilson seemed to have popularized this. But my own reading says forensic accounting is as old as the human beings. Because as long as the human beings started accounting for certain transactions, whether they are for company form of organizations or partnership form of organizations or for sole trader or for cooperative societies or any form of organization, I'm sure forensic accounting had been there. But only thing is, maybe somebody did not call that as forensic accounting. I will give an example for this. Normally when we are talking about derivatives, I do work in the areas of derivatives. The books on derivatives would credit the origin of derivatives to 1970s, that too to the American markets, Chicago Mercantile Exchange. But I was born before 1970, and as a child in my own village in Karnataka state, I have seen the farmers, including my own father, using derivatives. But my father never went to the school and therefore he did not study. He never knew that he was practicing derivatives. But I have seen the practice of derivatives in the agricultural field. Therefore, my father must have seen that his father practicing these things. But formally it is credited to 1970s. Like this forensic accounting also, although formal origins seem to have been from 1930s with Wilson, that too with Internal Revenue Department of the United States of America, and again credited to the Capone scam. This dates back much before. If you see Kautilya's Arthashastra and then various Vedic literature, they will talk about the investigation. They will talk about how people can misuse the authorities and how people have to investigate these things. So this, in fact, is the origin. And I'm sure forensic accounting is as old as the civilization itself. That is the origin, although formally we credit this to 1940s, that to Frank Wilson. Now, what is this forensic accounting? When somebody looks at the definition of forensic accounting as given by AICPA, American Institute of Certified Public Accountants, it's an application of accounting principles, theories, and disciplines to facts, hypotheses, or issues, etc., various things that encompass every branch of accounting knowledge. Now, if somebody has to specialize in, forensic accounting, and then somebody has to call himself as a forensic accountant, you would understand that when you go through the entire process of forensic accounting, it is not only related to accounting, auditing, taxation, then crime investigation, money laundering. It really encompasses every aspect of the human behavior. Therefore, somebody who is an expert, let's say in accounting, let's say in taxation, let's say in legal provisions of various enactments, that is the legislations of the country, and then various societal happenings, he would be the best forensic accountant. But formally, somebody has to define this, and therefore the AICPA defines forensic accounting as the application of accounting principles, theories, and then the discipline to the facts or hypothesis and issues and legal disputes that encompasses every branch of accounting. This is the way it has been defined. So forensic accounting provides an accounting analysis that is suitable to courts of law on the basis of discussion, debate, and ultimately dispute resolution. Now, litigation is one, investigation is another part. Now, when a forensic accountant is asked to prove the veracity of his findings, the claims that he makes in his own report, he has to be an expert in legal things, and he has to be an expert in accounting principles, taxation, and all these things. Just to bring home the fact how the forensic accountant needs to have the knowledge of all the branches of the human society, I will take one of the principles because that principle has always been taught, and then this is the origin of the accounting standards and subsequently reporting standards. One of the issues which has been quite often raised in all the reporting standards, earlier known as accounting standards, is economic substance over legal form. That is substance over form. Now, what is this substance over form? When we are looking at a transaction, any transaction in accounting, the accounting principles say you have to look at the economic substance of the transaction rather than the legal form of the transaction. That is what the reporting standards advocate. That is what the accounting standards advocate. Substance over form. But then what is the reality? When the accountants are asked to present their findings or reports in the courts of law, the courts of law, invariably, the judges take the other side. That is, they will take the side of the legal form. Therefore, when an accountant is presenting that it is the substance over form which needs to be considered by the court, but most of the court judgments, if you read very carefully, have emphasized on the legal form rather than on the economic substance, because the lawyers would argue based on the wordings of various legislations. And when the wordings of various legislations are put forward in a court of law, and then the judges consider the legal form as superior to the economic substance, then a forensic accountant, if he has to step in, has to have the knowledge of both these things. But ultimately, he has to defend that it is the economic substance. If he has to defend and then say that economic substance is superior to the legal form and argue for substance over form, he has to have thorough knowledge of both the legal form and also economic substance, and then take the root of the legal substance when he's presenting these facts in the courts of law and argue for the substance. But of course, when he is arguing for these things, let's say in the board of directors or before a knowledgeable committee which has the knowledge of accounting, taxation, and all these things, it is the substance which overrides the legal form. And therefore, he has to have the knowledge of accounting and then various disciplines relating to the accounting. Therefore, we normally say forensic accountant has to have the knowledge of all these things, and therefore, he has to utilize the knowledge of accounting, auditing, investigative skills when conducting an investigation. Equally critical is the ability to respond immediately and communicate financial information clearly and concisely in a courtroom setting, because in forensic accounting, invariably, the legal arguments become very important to present report, and that report needs to be defended, let's say, by a forensic accountant. So forensic accountants are trained to look beyond the numbers and deal with the business reality of the situation. Now, forensic accountants do not win or lose cases, but seek only the truth while conducting evaluations, examinations, and then inquiries. To be effective as a forensic accountant, one needs legal training and also training in various branches of accounting. Since the work of the forensic accountant will many times be used in a court of law, expertise in litigation support and testimony in courts of law is a prerequisite for a forensic accountant. Knowledge of use of business valuation theory is most helpful because most often there are a large number of controversies in the valuation of businesses, and this is where the knowledge of the accountant in the valuation theory is extremely important. Just very recently, when almost the guru in the entire world of valuations, can somebody in the audience unmute and then tell me who is the world-renowned authority on the valuations? Anyone? World-renowned authority on the valuations. Anybody who has heard this name? I'm sure you have heard this name, but maybe you are hesitating to tell. Anyone from the audience? Okay, since we don't have so much of time, this is the professor of finance, specialized in accounting, especially valuations, works in Stern School of Business, New York University, Ashwat Damodaran. He has very famous books, and one of his most fascinating, according to me, maybe you have a different view, most fascinating titles for one of his books is Damodaran and Damodaran. That is the title of the book, one of the books that he has written. I have literally added all the books written by Ashwat Damodaran. I'm his fan. I just see. I was listening to his conversation, and he came on one of the events, and then somebody was asking what is happening for the Zomato valuations, and then many of the companies, including Paytm valuations and all these things. He had valued Zomato when they came out with a public issue at about 41 rupees. But then when he was talking, it was quoting at about 175 rupees. So the valuations, depending upon who is valuing, you assign different valuations. Now, a forensic accountant is asked to present his own arguments for valuations. So unless the accountant is very clear and then thorough on business valuations, please understand that the numbers can be different for 2 different accountants. If you have 10 different accountants, you can present 10 different valuations. And this is where the dispute rises, and therefore the knowledge of valuation theory is most useful for the accountant. What does a forensic accountant do? He's trained to look beyond the numbers and deal with the business realities of the situation. He analyzes, interprets, and summarizes and presents the complex financial and business related issues, taking the prominent features of this. Forensic accountant will also be familiar with the legal concepts. Now, the public practice of forensic accountant can be in different fields. It can be in banking field, police, then government agencies, then insurance, all those things. We'll just look into some of the various legislations that India has enacted to look into all these things. Activities that are usually carried out by the forensic accountant: investigating and analyzing the financial evidence, then developing computerized applications to assist in analysis and presentation of financial evidence. Now, maybe you had some presentation on, digital accounting. You may have gone through these things. There are lots of cases in these areas. Maybe we'll look into some of those. Not many, but one. Okay, communicating the findings in the form of reports, exhibits, and then collection of documents. He also assists in legal proceedings, including testifying in the courts of law as an expert witness and preparing visual aids to support the trial in the courts of law. Now, what is investigated by a forensic accountant? This is generally true of all these things. Now, these are the things. Commercial damages, what are the damages that have been caused due to, let's say, lease defaults, breach of contract, breach of interpretations, business interruptions, and then breaches of shareholder and partnership agreements, reconstruction of financial and then accounting records, investigation of misappropriations, then assistance in establishing ownership and division of assets, commercial damages, professional negligence cases, partnership disputes, expert evidence. I am not getting into the details of each one of them. If there are questions, I can come back to those questions. I'm sure you would be able to understand these things. In fact, cases can be related to many of these things. You have partnership disputes, expert evidence, fair value assessments, personal injury damages. Then you have the matrimonial disputes. Then you have the tax disputes, compliances, then the financial statements, reporting of the financial statements, reporting of the taxes, tax planning, and then related issues. These are the various matters that are covered by the forensic accountant. Now, where are the services of forensic accountants demanded most? These are the areas. These are not exhaustive areas. Every area can be covered by a forensic accountant. Detection of frauds committed by the employees, and you can add the employers also. Then criminal investigation, settlement for outgoing partner. If it is a partnership firm, for an outgoing partner, how do you value the business as a whole? So what would be the settlement claim that you can give for an outgoing partner when the business is a going concern business? As is various condition, if a person wants to exit, what is the total amount that we can claim? And we can also settle for this outgoing partner. So that is another area where the services of forensic accountant are required. Cases relating to professional negligence. If somebody is arguing that so-and-so has committed the professional negligence, and if you have to quantify, we are not just interested in saying that there is a professional negligence, but we need to quantify what is the loss that has been caused to the organization or to the person when there is a professional negligence. Professional negligence, everybody can accuse. But then how do we quantify because of the negligence of the professions and then the persons who are involved? This has been the amount of loss. This is another area where the services of forensic accountants are required. Arbitration services between different parties, facilitating settlement regarding motor vehicle accidents. This is where the insurance sector comes into picture, and then the claims relating to the insurance, dispute resolutions, and then settlements. This is another area where forensic accountants services are in most demand. Now, the personal skills required. I started with this. If a forensic accountant has an all-round knowledge, not only of the profession of accounting, taxation, finance, but also of the every sphere of the human activity, that is the best way somebody can make himself as a forensic accountant. But I'm sure nobody can acquire that type of a perfection in every sphere of activity of the human beings. But then these are the broad areas where the forensic accountant skills are required. Playing more proactive risk reduction roles rather than reactive. Proactive rather than reactive. Reactive, we are emphasizing on what has already happened, how do we rectify? Rather than that, proactive, how do we see that these things do not happen. Now, how do we again play this proactive role? Maybe we also have the prior knowledge of some of the procedures, some of the happenings, and we have the cases, and we have the legal enactments, legal cases, court judgments. I go through all these things, and then based on that, I design my own ways of preventing something which is likely to result in loss. So I take precautions and then advise, and then come out with do's and then don'ts. Like the SEBI coming out with the do's for the investors, don't for the investors. A stock exchange coming out with the do's for the stockbrokers and then don'ts for the stockbrokers. So the forensic accountant also can come out with this type of a proactive role, which will reduce the future losses, not just the losses that have occurred. So designing and performing extended procedures as part of the statutory audit. Statutory audit. So this is not just vouching and then checking all these things, but designing and performing extended procedures. Sometimes a statutory auditor can just look into this valuations and then claim that I have taken the claim of the board of directors for valuing the closing stock. I have relied on the judgment of the management in valuing the closing stock. So they qualify the audited statements by giving these types of qualifications for the audited statements. But then a forensic accountant goes beyond that. Apart from relying on the judgment of the management to value the closing stock, did you look into some of the signs that emanate from financial statements? Like, for example, no profit, no loss for such a long period. Why did you neglect this aspect of cost or net realizable value? And then you have to question the veracity of how the net realizable value has been arrived at. So it is an extended service that you have to render. Now, acting as advisors to audit committees. There can be audit committees internally for the companies. There can be internal audit committees. Audit committees can be headed by the directors, that is the board of directors. Internal audit committees can be headed by the internal people from the management, and the forensic accountant can be an advisor to this. Assisting in investment analysis, investment analyst research. For example, how do you value a company, let's say for takeover, company which wants to come out with a public issue, company in which the government of India wants to disinvest and value, company in which the government of India has 100% stake and want to go for an IPO and wants to disinvest. The case is the LIC. What is the valuation that you can put on these? So assisting in investment analyst research. I was in one of the discussions, and in that discussion, we had some of the depositories who were participating in this, and people who were from the depositories were speaking. I was just asking one of the questions. Would you accept the type of valuations that the IPOs are seeing in the Indian IPO market? I was referring to some of the prominent IPOs. And I also gave the example. More than a century-year-old bank like the State Bank of India has this type of valuation in the market, but a newcomer who has just now come, they come out with a hefty premium and not a single rupee profit they have made till now. But the market has to pay so much for these IPOs. So how would one justify? So if a forensic accountant is asked to probe these things and then asked to justify, maybe he would be talking about this assisting in investment analysis and then the valuation decisions. Now, core knowledge of a forensic accountant, an in-depth knowledge of financial statements, a thorough understanding of broad schemes, ability to comprehend internal control system, then proficiency in computer and network systems, knowledge of psychology, interpersonal and communication skills, a thorough knowledge of companies' governance policies. Then the criminal, civil, as well as the legal system and court procedures needs to have the knowledge of all these. Now, the skill competencies required for a forensic accountant. These are the skill competencies. Without elaborating on all these things, this is taken from a study. I'll just show you what is the study from which it has been taken. You have the auditing skills, critical and strategic thinking skill, effective oral communication skill, then written skills, then identification skills, investigative, and then intuitive skills, organizing unstructured situation, research skills, legal skills, then all these about 19, and this is the article from which I have taken this. Now the types of forensic accounting in India, you have these are the various issues. One is a financial threat, say theft, securities fraud, bankruptcy, defaulting on the debt, economic damages. Actually, these are true around the world. It's not, although I have put this as whether I search for the United States of America, UK, all these things, most of it is common. Maybe the legal enactments might be different. Bankruptcy, we have defaults, economic damages, M&As, mergers and acquisitions, tax evasion cases, corporate valuation disputes, professional negligence, money laundering. Maybe we have special acts, but other countries may not have. Now, privacy information, diverse proceedings, these are the areas in which forensic accounting in India. Now, India has some of these legal enactments, and then forensic accountant will have to have the thorough knowledge of all these things. And when a forensic accountant is asked to investigate these are the various legal enactments through which the forensic accountant goes through depending on a specific case. We have the CBI, Criminal Bureau of Investigation, which ultimately steps in if it is referred to. Otherwise, it may not step in. You have Telecommunication Regulatory Authority, TROI, Act 1997. This is a legal act enactment which deals with the telecommunication, and the legal enactment talks about various issues like any legal legislation which talks about the provisions and then the penalties, then the violations, then what could be the punishments for all these things. Every act is talking about this. So Telecommunication Regulatory Authority of India Act 1997 is not an exception to this. Then we have another enactment, that is Insurance Regulatory and Development Authority of India Act, IRDAI, Act of 1999. Then Prevention of Money Laundering Act 2002. You must have seen various people being booked under various laws. Then we have Securities and Exchange Board of India Act 1992. Before SEBI Act was enacted in 1992, we did have somebody who was regulating the capital market from 1992 onwards. Although SEBI itself did not come into existence from 1992, but in 1992, SEBI was given the statutory status. Can somebody come unmute and tell me what was the authority which was regulating the capital markets in India before SEBI came into the picture? Anyone? Anyone from the audience who can quickly unmute and tell me what was the legislation that was governing capital markets?
Capital Control Act. Capital Control Acts.
Yes. Yeah.
Capital Control. Sir, is it Capital Control Act previously?
Yes, it is CCI, Control of
Capital Issues Act.
Capital issues. Now, after SEBI was given the statutory powers and after SEBI was formed, CCI Act was abolished and SEBI Act was enacted. Now today, SEBI is the regulator for all the capital market activities. Initially, this was regulating only the stock exchanges, but now even the commodity exchanges are being brought because we were seeing that there were regulatory arbitrages, lots of cases involving the regulatory arbitrages, and therefore SEBI has now been given the power of investigating even the power over the commodities. Not only that, again, when the act was enacted, SEBI was regulating the activities of the companies which are formally listed on the stock exchanges, on the platform of any of the recognized stock exchanges. But in the recent times, SEBI has been given the power to regulate even those companies which may not have been formally be listed on the platform of a regulatory, say, stock exchanges, but have raised the money from the general public. The classic example we have seen the West Bengal, where the chit funds were investigated, and SEBI now has been given the power to investigate even when the company has not been listed, because there were cases where people had raised 5,000 crores, 10,000 crores, 20,000 crores without even being formally listed, because they wanted to escape from the clutches of investigation from the Securities and Exchange Board of India. It is Securities and Exchange. It is not Securities Exchange and Exchange Board of India Act. Today, Securities and Exchange Board, SEBI, in fact, has control over the entire activities. Maybe tomorrow, in the case studies and then the scams, I'll bring one of the cases involving the intervention of SEBI and then the security scam, and maybe I'll cite the powers that SEBI has been given. But for now, I'll not get into the details. If there are questions, definitely I can come back to these questions. Now, big corporations and then companies, you have to Companies Act of 2013, 1956, its predecessor act. They have enough provisions where the forensic accountant has a big role to play, and India has, in fact, incorporated many of the powers that the board of directors enjoy, and then the various legislations are being given under the Companies Act. Then military and police department also has the provisions for investigation, and therefore if there are investigations that have been called for in the military establishment, police department, they have their own acts which will govern, but the forensic accountant has a big role to play in these establishments, military establishments. Sometimes the procurement, you have procurements in the military police department which will run to hundreds and thousands of crores, and if the government of India or the state governments or any public suspect that there are interplay of different forces, and that has resulted in loss to the exchequer, then a forensic accountant or a forensic consultant might be asked to investigate into the various issues relating to these departments. Then the state governments and then the central governments. State and then the central governments have their own authorities which have been enacted through the respective legislations. The best example, for example, if you take the state of Karnataka, other states, you can look into this. You have the Lokayukta Act. Lokayukta, in fact, although people who are heading this Lokayukta are the legal experts, if they want to quantify and then investigate, they too take the expert committees would consist of accountants, tax consultants, lawyers, and all these things. So both the state governments and then the legal, say, central governments, they have made provisions for investigating into the activities of the employees and then the various establishments, including the autonomous institutions. So the one of the examples is the Lokayukta Act. I'm sure at the all India level, you also know there were various movements, and then the central government was pressurized by the civil societies and said that you have to have a similar legislation to investigate the activities of the central government employees. Then the banks and financial institutions. Banks and financial institutions are normally governed by the Reserve Bank of India, and then they are not outside the scope of various legislations, but the main authority which investigates the banks and financial institutions and also governs the banks and financial institutions is the Reserve Bank of India, and the Reserve Bank of India issues the various guidelines, then circulars, then statutory regulations are made. If you have any issues relating to this, then an accountant would be called upon to investigate this. Then you have Serious Frauds Investigation Office, SFIO, is the dedicated division of the Department of Company Affairs, which involves the investigation into frauds that involve violations of multiple laws, such as FEMA Act, Reserve Bank of India Act, Income Tax Act, maybe the Indirect Taxes, GST Act, and various other legislations. Then we also have Central Vigilance Commission, where the provisions of some of these, employees who are appointed directly by the central government or the institutions which are controlled and managed by the central government. If there are investigations which need the intervention of Central Vigilance Commission, Central Vigilance Commission also has the role in this, and Central Vigilance Commission invariably takes the services of a forensic accountant if it involves quantification of the damages caused by the act of an employee who was acting, one is on his own behalf and also acting on behalf of the organization. If they find that there is some type of a collision between different authorities and that has resulted in maybe misappropriation and then damage to the institution, damage to the exchequer, and damage to the third party, all these things. When CVC investigates these things, then in the investigation process, a forensic accountant in India has been called. It also helps in resolving the bank fraud cases. There are cases involving the commercial banks in India, public sector banks in India, where CVC has stepped in, then the Central Bureau of Investigation has stepped in. We have the state governments and then the Lokaita. I was just referring to this. Then the most recent legislation that deals with this, although according to me, I have not seen many provisions where, IBC has been invoked, but my own reading of the cases that have been referred to IBC shows that you have a vast scope for forensic accountants. At least for now, I don't see anybody using the services of a forensic accountant quite widely. But personally, by looking into the various cases that have been referred to IBC, I see that a forensic accountant will have a larger role, much larger role. Here and there, I see the role of forensic accountant in case of IBC only as a peripheral role. But if you look at the ramifications of the various cases that are under investigation under IBC, I see that a forensic accountant has a larger role to play. Now, IBC itself, although is a new legislation, the provisions of IBC, as I read, are not very new. Now, why am I telling that they are not very new? The provisions of IBC, which have now been codified, were existing in India even in 18th century, 17th century, 19th century, 20th century, 21st century. But what is the difference? The difference in the provisions of IBC is in the resolution mechanism. Now, if you look into the various legislations that I referred to earlier, like the legislations relating to the various, maybe the Contract Act, Insurance Act, and then IRDA Act, RAI Act, SEBI Act, Money Laundering Act, and then Serious Frauds Investigation Act, Reserve Bank of India Act, FEMA Act, and you name many of these, including the Privacy Information Act and all these things. When I refer to all these things, there are provisions relating to the IBC, but one of the differences that I see in the IBC is in the resolution mechanism. Now, I think it is going upward. I was thinking I'm moving forward. Let me just move here. Yeah. One of the provisions, prominent provisions according to me in the IBC is relating to the resolution mechanism. While various legislations have stipulated various time periods, in certain cases, no time periods have been stipulated by the legislations. IBC stipulates the time periods within which the disputes have to be settled. And they have also laid down that if these are not resolved, then bankruptcy proceedings have to be initiated. And these bankruptcy proceedings, once again, they have specified what is the time period within which the bankruptcy proceedings have to be closed. You cannot carry on for years together to close these cases. Now, this IBC itself is relatively new. This code came into existence in 2016. There are amendments in 2017, then 2018, then 2020, 2021 also there were amendments, and IBC was kept in suspended animation in the year 2020, March 2020 to be more specific, because of the outbreak of the pandemic and then the nationwide lockdown. The provisions of IBC were kept on hold. So some of the companies had a sigh of relief after IBC was kept in suspended. They did not say they are abolishing this. It has not been abolished, but they said for now, because there is a nationwide lockdown, there are difficulties for resolution authorities, and then the various authorities who have been established under IBC Code 2016 to resolve the cases. They said, we are giving a moratorium. That was only a moratorium. They did not say that we are abolishing. It's a moratorium. And that moratorium has been withdrawn. But the advantage of that moratorium, according to me, under the IBC was some of the companies were able to come out of the IBC. I hope you know what IBC is. I am talking about IBC. I refer to this because I see a huge scope for forensic accountants in India, which has not happened till now. But my own reading of the cases says that there is a huge scope. But unfortunately, this scope, this particular skills of the forensic accountants are not utilized under the IBC. The various authorities maybe have not utilized the services of the forensic accountants. I hope you are aware of what I am talking, IBC. Anybody who can unmute and then tell me what this IBC is?
It is Insolvency and Bankruptcy Code.
Yes, it is Insolvency and then Bankruptcy Code. It is more in response to the ranking of the country in the international scenario. If the dispute resolution takes a long time, the mark that we get, the score that we get is relatively low. And therefore, Government of India wanted to quicken the process of resolution. And therefore, they started codifying the various bankruptcy procedures, provisions that were there in various legislations. And it has codified, and we call it as Insolvency and Bankruptcy Code 2016. Unfortunately, this is my own interpretation. You may have a different opinion about my opinion. Unfortunately, what is happening is IBC gives about 6 months for resolution, especially in cases where the companies default on the payment of principal and then interest if the total amount of loan outstanding is about 2,000 crores. But all of you would understand, if the business is going through the problems, coming out of their difficulties within 6 months period when they are defaulted, it's an extremely difficult situation. Now, what happens if they don't come out of this? If they are not able to honor the obligations, it is referred to IBC. If it is referred to IBC, then it is put through this insolvency proceedings. Now, what is happening in the insolvency proceedings is, there are cases where the banks have been forced to take a haircut from 10% to 90%. 10% to 90%. I'm really surprised how these things are being resolved. If the banks have to take a haircut of 90%, if they are given a loan of 1,000 crores, they are taking a haircut of 900 crores. What they are getting is 100 crores. They could have as well waited for some time for the companies to repay. I'm sure the companies would have come out of the difficult situation and paid much more than what they are receiving from this bankruptcy court, insolvency proceedings court. This is my reading, especially with the small and medium industries. The entrepreneurs are going through a grueling stage and they are going through the most difficult phases because of various issues. Pandemic, people started arguing. Yes, Government of India has extended, but then before that, they also had some time, when we had new legislation which replaced the indirect taxes. Then earlier, the MSMEs also went through this most difficult time of when 100 rupees, say 500 rupees and 1,000 rupees notes were withdrawn from circulation in the form of. What was that legislation and when did it come? And 500 and 1,000 rupees notes were withdrawn?
2016, sir.
Yes, 2016. November 2016, right?
Yes, sir. Yes, sir.
Yeah. Okay, demonetization. Although demonetization is not the first phenomenon in India, but of course, the notes that were demonetized, it was an unprecedented one, but some of them have, in fact, had implications for IBC and many MSMEs. So what I'm reading from this is, when you look at the financial statements and then the resolution mechanisms of these companies, the banks have taken, and then the various debt holders have foregone a huge amount of the debt they were expected to receive. And this is where I see a lot of scope for the forensic accountants in India, although currently their services are not being utilized in this sphere of activity. Then
so the time now is 3:10. As you said, just to remind it.
Yes, fine. Okay. Another just 5 minutes. I'll close and then maybe we can come back for discussion. Then we have Contract Act 1872. We have various provisions as commerce, management, teachers, and accounting teachers. We have gone through this Contract Act, agency, and then the principal, valid features of contract, various provisions relating to this. So Contract Act also has various provisions where there are defaults, there are cheating, there are frauds, and forensic accountants has scope in investigating various frauds and defaults that are being committed in breach of the various provisions of the Contract Act 1872. But my own reading says, if I go through the various cases and then the case laws, then the laws and the verdicts that are being given by various courts of law in India till now, I don't see many cases where the accountant services are being utilized. Because if you look into the arguments of those cases and then the dispute resolution mechanisms, then the ultimate judgments of these, you very clearly make out that when damages are being quantified, maybe legal experts are used more than the people who are professionally qualified to quantify the extent of damage. These extent of damages arise because of the valuations, arise because of the mergers and acquisitions, arise because of the outgoing partners dispute, and then the divorce proceedings, various things. So if you look into the various case laws, I clearly see that the forensic accountant has a bigger role, but I have not seen the services of forensic accountants being used. And therefore, I see that in IBC, you have very good scope. Then contract act also has good scope. And then we have Negotiable Instruments Act of 1882. Compared to the IBC and also Contract Act of 1882, I see the forensic accountant's role being utilized and then his services being utilized to some extent here in the Negotiable Instruments Act, more because the institutions which are involved in the Negotiable Instruments Act are either the corporates or the banking companies, insurance companies, and then the financial institutions. So I have seen, based on the case laws, the services of the forensic accountants being used relatively more in case of the Negotiable Instruments Act 1881. Then in most of the cases, you will see Income Tax Act of 1961 using the services of forensic accountants. But here also, if you look into the nuances and then the more detailed analysis of this, more expertise of a tax consultant is being used rather than a forensic accountant. Legal legislation interpretation from the angle of a tax consultant is fine. But again, looking into the substance of the transaction, according to me, is more important. Now, this is where I see a larger scope for a forensic accountant. For example, CBDT, Central Board of Direct Taxes, slapped a tax notice of, I don't remember exactly, but it is in the upper side of 10,600 crores on Vodafone. It's not a small amount. And then Vodafone disputed this case. Then CBDT did not oblige. They went to Supreme Court. Supreme Court gave judgment in favor of Vodafone. When Chidambaram was the finance minister of this country, to counter the provisions of the judgments that was given by the Supreme Court, he amended the Income Tax Act retrospectively from 1962. Vodafone again disputed this because retrospective amendments will send wrong signals in many cases. Now, this is where, without getting into the details of the case, this is where I see substance over form argument should have been a predominant case in the Vodafone case. But what has really happened is the argument of the CBDT, according to my reading, was more from a form, that is legal form, legal enactment. This is where CBDT case became relatively weaker. And then, Vodafone won, because given the current legal legislation, legal form, where is the scope? Because the transaction took place in some other country, but the activities are taking place in India. And CBDT said, we construe this as the transaction that has taken place here. But CBDT could not defend in the legal form. The argument should be more on the substance and then the legal form. If there is an accountant who can present substance by vehemently and then tactfully arguing the legal and putting the substance over form, maybe many of these cases could have been in favor of CBDT. I think Vodafone also knows that in substance, this is not a case which can be in favor of a company, but in form, yes, it can be in the favor of a company. So these are, I think this is, we are almost nearing 3:20. So these are the cases where the various legislations have provisions for the forensic accountant in India. I'm not getting into the details of the financial reporting standards in the form of IND-AS, because there is a separate session on those. And IND-AS, when you look into the wordings of IND-AS and also their parent standards, IFRS, they emphasize on the substance rather than the legal form. But one of the biggest problems that the countries around the world, not only in India, facing is when the courts of law take the legal view than the economic substance. So this is where I feel that the forensic accountants have a larger role to play. And if a forensic accountant has the legal knowledge thoroughly, along with the professional knowledge, it would keep him in good stead, because this is where we need the services of a forensic accountant. This is the roadmap for the forensic accountant profession and also forensic accountants in India. And I would stop it here. I would welcome your suggestions, critique, dispute, whatever you would like to present. I should personally thank all of you for your very patient listening. And I would be extremely happy if you make your own contribution stating that this is where you went wrong, this is where you did not cover, all those things. I'm sure you would understand that, we may not be able to cover everything. If I have omitted, you please point out. If you have another point of view, I would also like to learn from you. Yeah. Yes, thank you very much. I'm fortunate today I did not have interruptions, because suddenly, this internet gets disconnected. So power is very kind to me here. Yes.
Now, the session is open for discussion and the participants can clear their queries either using chat box or by unmuting yourself.
Yeah, if you are using the chat box, maybe one of you will have to read, consolidate, and then put it to me. I can also read, but I would prefer some of you consolidating and putting it. If you unmute and then ask and contribute, I can directly respond. Either way,
Sure, sure. Sir, you elaborated the role as well as the importance, the skills required, everything with the help of cases also in the Indian scenario, why it is very essential, you have explained. But the problem is, it is not yet made mandatory in India. What do you feel, sir? Why? Because we should think in that line, because plenty of scams are reporting day by day. Now the NSE is also facing such kind of an issue. So it should make mandatory, isn't it, sir?
Yeah, in fact, it will take quite a long time, according to me. It should be made mandatory, especially when it comes to the question of quantifying the loss to the exchequer, damages to any party. The forensic accountant's role should be made mandatory. But unfortunately, what is happening is That is our argument, right? If you go to the lawyer, they would say, this is our area. If you go to a chartered accountant, you would say, this is our area. If you go to an accounting professor, you would say, I am more qualified. So there are issues relating to making it mandatory, especially when it comes to the question of who is qualified into this. It would take some time, but my own reading is it cannot be made mandatory all of a sudden in all spheres of activity. Like I have listed all these things. You have the Reserve Bank of India Act, you have Banking Regulations Act, you have Money Laundering Act, you have SFIO Act, and then FEMA Act, various legislations. But somewhere the starting has to be made. And according to me, that starting could be one which involves the violation of, let's say, Income Tax Act, FEMA Act, IBC. This is where we should put forward, accounting profession should put forward and say that it should be made mandatory. If the representation is made very clearly, I would thoroughly argue that, especially in the case of IBC, there is 100% case for the presence of a forensic accountant. But that is not happening. This is where we could start. FEMA is another case. RBI Act is another case. Income Tax Act is another case. And then GST is another case where the starting can be made. I accept what you have suggested.
Thank you, sir. Other participants, please. You can unmute yourself and ask.
If you don't have question, you can also contribute. You can also contribute. Yes.
Sir, rightly.
Just 1 minute. 1 minute. I'll be happy if you introduce, because since you are not able to see each other, you can introduce.
Sir,
Yeah.
my name is John Brito.
Okay.
I am a faculty in the Fatima Mother National College, Autonomous College, Koilon.
Okay.
Sir, rightly, it should be called as forensic accounting or forensic auditing.
Yeah.
My question is, rightly, it should be called, whether it should be called as forensic accounting or forensic auditing. This is what my question, sir.
Yeah. I would put it as forensic accounting rather than forensic auditing, because, when do you normally audit? Normally you audit after accounting. If the services of a forensic accountant is used at the stage of accounting, it becomes more proactive role. This is where we are arguing for the scope of a forensic accountant. So auditing role comes little later. So it should start from the accounting and extend to auditing. I'm not saying it should not be there at the auditing stage, but should start from the accounting stage itself. That is the proactive. It becomes reactive if you are utilizing his services only at the auditing stage. It becomes proactive if you are using him from the accounting stage and then extending his services to auditing. But of course, at the auditing stage also you can utilize, because since it is not being made mandatory, if you feel that something has happened and then you want to investigate that, yes, at the time of auditing, possible. Yeah.